Righto, Matty Mortars, we're on the bloody countdown. Nearly finished for the bloody year. No, sorry, I can wait because I'm devastated not doing this every day. Right, today, bit news out of IGO about Cosmos update, and on the back of a bit of an article out of Chanticleer about the green bushes situation, a bit to talk about there. The re-emergence of the main man Flanno.
Yes.
He's back in the mix. He's got a big and very good position to go to. And you want to talk going from lithium to iron ore, that is big.
Back to iron ore.
Back to iron ore.
Will it be very good? Maybe we're going to do rapid fire about news out of WAF, Spartan, AVL, TMT merger, covering a couple of days. Mate, she's all bloody go.
I think it's our last news day, by the way, mate.
Yeah, I know. So tomorrow we're going to rip the infamous 2024 predictions by the fundies. We've got an absolute cohort of fundy legends, and we're piecing them all together.
9 fundies given their predictions for 2024. It's going to be, I think, a pretty cool video.
9.
Yeah.
Is there 9? Far out. Nothing. Those WhatsApp groups are coming in handy. Love it. Right. Good news, boys.
Tell me.
Good news. The KCA Normet stores truck and the underground truck, they're all out on hire.
Oh, you've done your job.
I've been waiting for this, mate.
I don't think Adam wanted to say it, but I think it's because of the money of mine.
Well done, mate.
They're out on hire. Job done. But, boys, there's still work to do.
There is, because they're growing.
They got don't forget about the ITs, the L120Fs, mate. More coming between now and May 2024. The only bloody 120Fs left before they upgrade them to need AdBlue light. These are just easy.
Don't sleep on
Easy ITs. Just don't even think about it, JD. Available for hire now. And, mate, now this is the type of bloke Adam is. They also got hire purchase agreements. So they give the hire to buy option over 12, 24 and 36 months if you're having trouble getting the capital, like machinery hire and philanthropy, I see it as. Adam is that type of guy looking after business owners. What a bloke. KCA.
Oh, what a ripper.
Now we've got a new product to release.
Tell me, mate. Is it
on behalf of KCA?
You've already called him the Bunnings of mining services. So
well, this one you find in your gardening section of Bunnings. We introduced to the mighty miners the Water Viper.
Oh, hello.
So this is an old bloody. It's like a shotcrete spray rig that's going to be converted into a big bloody high pressure water cannon to wash all the ore off the footwall and all that.
So is this one in the garden section of?
Mate, that's in the reticulation section of KCA on a massive scale. So, a particular client had a flat ore body, needed to wash off the remaining ore that was hanging up. They had a problem. What did they do?
I bet they called KCA.
They called KCA. They called KCA, and this is what KCA are doing, repurposing a machine for them. That's what they do. Absolute bloody legends of the underground mining industry. I love it.
That's awesome.
Mate, hit them up for once they finish with it, this Water Viper. Mate, they might make more. Who knows? But, buddy, love your work, KCA.
Thanks for the support, KCA.
Now, another message from the tenement gurus. Right here, have a look at that. Merry Christmas from all of us at MMTS.
Who do they get doing these cartoons? I love them, by the way.
Mate,
I want some in my house.
It could be like a number of people in the organisation that have this talent. You got the software legend in there that's created the database just to hunt down tenements as they pop up.
It's just to keep on top of everything.
Mobile notifications.
Bloody automated.
They do not miss a beat.
Nah.
Mate, and this is like, mate, WA, Northern Territory,
Queensland,
New South Wales, mate, South Australia, mate, anything tenement manage related, they are the Bunnings of that too. The generic name, the one-stop shop, bloody love them. Now, you've got Eva, Helen and Shannon running it, but I guess a special mention to Shannon because he just thinks about tenements non-stop. I just hope that's like that his hobby. Now,
decades in the game.
I just hope over the Christmas break he can find a bit of time to have a well-earned, well-deserved break. But I think on Christmas Day when he's unwrapping a present, he's thinking of the next tenement that's going to be popping up.
Just looking after the clients.
That is the organisation you're dealing with. So, look,
Very impressive.
talk about being in capable hands. So, buddy,
You got any tenement needs, get in touch with MMTS.
And just remember, they are the hydralyte of title services.
exactly. Don't lose your tenement because you weren't with MMTS. That would be embarrassing.
Prevent the headache. Just get them in.
Take action. Love your work. Thanks to MMTS, KCA, and all our other sponsors.
Merry
for
Christmas
the
to
year.
them.
Merry Christmas to you all. We wouldn't be here without the bloody support they've given us. Right.
Let's rip into
boys,
some mining news.
Let's bloody rip into it. What
We got quite a bit on today, and I reckon we should start with IGO. That's a big company that's share price has been falling like a stone. Probably in tandem with the lithium price and how quickly that's been coming off. But last time I looked, they're less than a $6 billion market cap now.
5.8 this morning, I think.
Yep, and you'd attribute most the value that's left in that 5.8 billion to the lithium part of the business.
Yeah.
But we're going to talk about
the green bushes part of the business.
Exactly, but we're going to talk about the not so great acquisition and the nickel part of the business.
So this announcement come out mid this morning. So it was a Cosmos project update, and the crux of it is the shaft hoisting project is being halted, and they're going to truck the ore all the way from the bottom, which is about 1K deep. So my understanding is the raise bore, the shaft is in and being concrete lined, but they are now halting the installation of like the head frame, the hoisting system. I would also assume the underground crushing station that would have to feed into it, and they're deciding to now truck all the ore up from the surface. So
Why would you do that, Matty, if you've already, put the shaft in, basically?
Well, they're obviously trying to save on whatever
Remaining
capex is remaining, or because it would be definitely cheaper to hoist it than trucking. No doubt about it. But will it be cheap enough to offset the extra capex at these low nickel prices? There's not much information that's been put out.
The capital has already been sunk into this, so they've put photos in recent announcements of the shaft. It's not like a
not all
study
all the capital has been sunk, but
exactly. So there's room for capital.
I think between it was Canaccord and Citi, between them they're predicting 150 to 250 million of capex left to go on the project on their models. So, and it says at the bottom here, IGO advises that it is likely to record a further impairment against the Cosmos assets. So remember, IGO acquired Cosmos within the $1.3 billion acquisition of Western Areas in 2022. So, and they already recorded a non-cash impairment charge in its FY23 results of $968 million for the old Western Area assets. So, and then now there's more to come. But look, as you said, JD, to me before, it is an accounting thing. It's not saying they're worth zero.
And there was also the notion that they were sort of wiping the slate clean before Ivan Vella, the new CEO, would come on board. He now has, in the last week, come on board and joined. But, I mean, it doesn't look great, does it?
Yeah.
So there's obviously taxation benefits to impairments, but your book value goes down.
Yeah.
Yeah, it's. I was just wondering if there's like a balance sheet implication as well. Because I didn't do the deep dive, Matty. But if they've sunk a bunch of capex and they get lower opex from it, but they're just trying to avoid the remaining capex. I wonder, given the other dynamics of the business, you've got Greenbushes stockpiling and nickel's obviously bloody in the shitter. Like, is there a degree of just kind of trying to maintain a healthy balance sheet rather than
weather the storm.
Get some stress in there. They do have a little bit of debt. I'm just looking at their current
so it's and as I said, the key word was halted. It's not being cancelled because it's pretty much a very expensive fresh air ventilation shaft at the moment. So that's one benefit. There'll be more vent going down there. So,
but I mean, a review is underway of Cosmos, in a larger sense.
That's already been happening. Yeah.
Yeah, and I mean the outcome could very well be that they decide to put that on hold for
Yeah, could be on hold. They could divest it. Who knows? IGO could be a takeover target at considering their share price is halved. Who knows? Who knows?
I mean the Greenbushes stake would be of a lot of interest to many people out there, depending on the price.
And we'll get into that. So as I said, and it's interesting with Cosmos. So their capex in their PFS was 200 million. Their DFS, it went up to 299 million, and then it was up to 825 million following the acquisition. And I think their Canaccord now are predicting about a bit over 1 billion for the capex. So look at how that has increased over, I guess, the high inflationary period, and whether it was changes of scope or something. But yeah,
I bet it's a combination of factors.
Yeah. So, and as I said, strategic review is never a good thing to hear. But look, the nickel 1 year nickel price, that paints a pretty good picture here. Look, down from up near $14 a pound to below in the sevens. And
that's year to date.
That's year to date. So then and obviously IGO's share price, God, they were in it this July, they were up, hit $16 now at well under halved at $7.50. So yeah, so onto the Greenbushes asset, and it's probably because remember end of last quarter, IGO announced that they and Tianqi were planning to stockpile some of their Greenbushes lithium, which come as a surprise to everyone, thinking why would the lowest cost hard rock lithium project in the world and the best quality be stockpiling their lithium. So, and it was a great Chanticleer article that came out yesterday from Anthony McDonald that went into the whole IGO lithium side. So look, and the big driver is, I think we have mentioned it before, the pricing mechanism for Greenbushes. So because it's based on this backward-looking benchmark prices. So effectively they use last quarter's pricing.
Yeah, 3-month lag.
This quarter. So, but IGO don't have the marketing rights for the lithium. It's Tianqi's makes the choice of how to sell the lithium, not IGO. So they're just got them by the balls in that sense, pretty much. So
isn't it interesting just on the structure of this asset, right? So IGO's interest is in JV with Tianqi. So
that's the 50. That's 51.
That's the 50,
That's the
51,
TLEA.
and Tianqi effectively has about 26%, call it,
Yep.
of the total asset. But then the TLEA's JV is with Albemarle for the rest of the asset. So even though Tianqi only own 26%, they effectively have control, operating control, marketing, decision making, all that sort of stuff. It's a small amount to own to have
I don't think they have marketing.
Right?
Albemarle, they have the marketing rights for their 51%.
Gotcha.
But not Albemarle would then.
Yeah.
They have the marketing rights for their 49%.
Marketing rights, but then there's the operating,
the operational
asset
control.
Tianqi's operational.
We should paint the picture a bit more why this marketing for that portion of the sales is.
Because it's effectively at the moment, Tianqi can buy spodumene off the spot market cheaper than they can get it from their own asset at Greenbushes because of this backward-looking pricing mechanism. So hence why the stockpiling is happening, because Tianqi's like, right, I'll just buy it cheap as off the spot rather than paying. And so IGO, that's affecting the check that's given to IGO because it's being stockpiled. So until the lithium price either flattens out or starts to go back up, it has to flatten out so that the previous quarter's price is going to be equivalent or somewhere close to equivalent to the spot price. And
this is why I think there could be some balance sheet kind of portion to the story around Cosmos, because obviously, I don't know what their OPEX is at Kwinana, but that's going to be losing money because, and then Greenbushes is stockpiling, which is your cash cow. Then you got all the nickel would be losing money. So I just wonder if there's a bit of balance sheet, kind of consideration informing the decision to discontinue the shaft development.
Yeah, it makes perfect sense. And it's because they're trying to renegotiate that Greenbushes agreement so that the TLEA can sell on the spot market. But now you've got the ATO involved because they're saying that if you change the agreement to sell on the spot market, then technically you're paying less royalties than what you should have been paying under the existing backward-looking agreement. So the tax man doesn't miss much. So that's where. So it sounds like it's bit up in the air. Then you've got the new foreign entity of concern rules as well. We talked about it last week. The information of being told the analysts that have been liaising with the companies are saying that their internal legal teams think that they will be classed as a foreign entity of concern, and we're talking about Greenbushes and Mount Marion because of the Ganfen and Tianchi ownerships. That's coming from their company.
So ultimately, those assets wouldn't be eligible, or wouldn't be IRA compliant for the purposes of the foreign entity of concern rule.
Yeah. So and you think if the company's saying that, they must be pretty sure, because that's not in their favour at all. So overall, very difficult period for IGO, it appears. So, and as we said, what are they going to do with these nickel assets in this environment? Or is it, as you said, Trav, trying to curb the pain for a bit with the capex? So,
yeah, they've been quietly winding down the, part of Forestania. The assets there have sort of stopped, so things have gone a bit quiet on that end. But if you look at the broker reports and the valuations, it's in some cases almost 95% made up on a NAV sort of basis of Greenbushes, off the lithium business. So, yeah.
Oh, a lot happening. Right, big Flanno has re-emerged, become MD at Arrow Minerals.
The mighty Arrow Minerals. Yeah, I think they were about a 6 million market cap when I looked. So,
are they 12 now? They're up 50% today. No, sorry, 9.
Up one tick, yeah. So they were last trading at 0.3 of a cent, up from 0.2 of a cent. So
flying.
A proper micro cap we're talking about here, but they're getting recapitalized. The whole structure of the business is changing. They're getting people like Jeff Dowling, who's also on the board at NRW, and Tommy McKeith, who's a ned at Evolution, on board, and Alwyn Forster of Hastings and other fame as well, chipping into the raise. So they are aiming to raise $4. It's obviously going to be over a couple tranches, given the restrictions around how much capital you can raise. The raise has been done at 0.1 of a cent, so literally can't get any lower than that.
Cannot get a lower denomination.
And pretty much everything I'll mention is subject to shareholder approval, given the sort of percentage of the company up for stake and the amounts being raised relative to the market cap. So Flanno is going to collect 865 million ZPOs. They are zero strike price options, for those wondering. He's also got an incentive.
Subject to approval, yeah.
Yeah, exactly.
So what's that, 865 at 0.3 of a cent? That's what, 2.5 mil, about 2.6 mil.
Around about, obviously, sort of depending on where that share price floats. But, I mean, this is going to be, a huge number of shares on issue. He's not going to be able to trade them. And like I said, everything we're talking about is subject to shareholder approval. He's also being incentivized to get a resource of 50 million tonnes at greater than 60% grade iron ore, what we're talking about.
That looks familiar.
And also it does, and also to increase their ownership in the project. So I'll get into the project in a moment. There are holders out there of this con note that the company has. They're going to convert half into equity at a small premium to the raise price. Obviously, the raise price is at rock bottom, but that's still at a good discount to where the stock has last traded. The holders of that con note are also going to get ZPOs. They're going to get 778 million of them. So at 0.3 cents, that is worth $2.3 million. So again, subject to shareholder approval, it'll be very hard to trade out of. Something will actually need to go right. Arrow is also going to use 500 grand of the cash that they're raising to pay out the remaining half of the con note. The project is an interesting one. So
where is it, JD?
It is in Guinea. So it's a real long shot. It's to the north of Rio Tinto's Sanbrado asset, which we spoke about last week. So you've got blocks 1 and 2, and then beneath that you've got blocks 3 and 4. Blocks 3 and 4 are owned by this consortium called Simfer, in which Rio has a large interest. So these guys have tenements just to the north of that. They don't have anything there. They've done a couple bits of drilling. They've had hits of 58.5% iron ore. So, they're, like I said, Flanno's being incentivized to get something over 60% grade. Rio Tinto's has a resource of over 65. So a very high grade product is what they're looking to get out of there. But this is a long shot. You can see Flanno's getting himself and everyone there sorted. This company is starting from rock bottom and they're going to try and do something with it. But Guinea isn't the easiest place in the world to operate from. And there's a lot of different parties, angling here. There's a lot of Chinese interests in those blocks 1 and 2. So the cash is going to go into drilling, and let's just see what they can do over the coming periods.
Interesting. Oh, he's back.
Looking forward to a few more presentations from Arrow Minerals.
Right, there was 2 days ago, they went into AVL and TMT regarding the
Into trading halt.
the illustrious vanadium merger. They went into trade note. Yesterday come out with
A recut deal.
being recut. So instead of TMT getting, what was it, 1 AVL share for every
12
other way
for
around,
everyone.
sorry.
Yeah.
12 for 1 ratio on the deal. They're now getting 14 to 1
Who doesn't love a
AVL
bit of-
shares for TMT share held.
That's right, mate. The uplift predicted by Money in Mind, of course. So big pat on the back there, mate.
Who would have thought, eh?
But I think the key word in this announcement in the recut is best and final. So AVL, they can't lift their consideration any higher from here. So they're sending a message to those frustrating TMT shareholders: don't complain anymore because we legally cannot uplift the offer from here.
They're frustrated shareholders and they're frustrating
Exactly.
to the AVL and
Exactly.
TMT
There's
people.
a lot of frustration on this deal. But the restructured deal has the support of 4 more shareholders representing 12.9% of the register, taking the total voting support to 38.6%. Interestingly, of those 4, only 2 of them were on the list of rejecting shareholders in the scheme booklet. So it appears to me like there's probably still a group of holders that remain unhappy at the recut deal price. But 38.6% intend to vote for. I'd bet a chunk of the rejecting shareholders actually end up voting for. Now you've got best and final in writing. So let's see how the voting eventuates here. That's 17% against. That 17% against contingent that was in the scheme booklet, that's reduced down to 9.4 when you remove those 2 shareholders that have now said they're voting in favour.
So they were 2 of the biggest shareholders by number of shares held in that contingent.
Of the rejecting group, yeah. And I reckon the deal gets done now, but let's wait and see how the punters vote on the day.
I suppose because the implications of voting against and keeping this merger from happening means that 2 companies exist for longer and need to raise just more capital to keep surviving, and future dilution comes up.
Yeah.
That is a consequence of it.
I think those TMT shareholders will be having a long, hard look in the mirror thinking, who else is going to come and take us out?
And that's the reality, right? You're sitting there and you're thinking, yeah, this deal feels unfair. Maybe it feels slightly more fair now, but it still feels unfair. But the reality is, what's my alternative? My alternative is no deal, and that actually could be even worse, even though it feels unfair.
Yeah.
Agreed. Let's talk about West African Resources, guys. WAF. So they've come out with a maiden underground resource at M5 South. So it's a part of the Sanbrado gold operation that they've been mining for a few years in Burkina Faso. So I found it hilarious. In one of the opening paragraphs, they describe themselves as unhedged gold mining company West African Resources. So they're very eager to get that unhedged fact in there. It feels a bit out of place. I don't think Burkina Faso-based gold mining company would roll off the tongue quite as well, or it doesn't sound as enticing for prospective shareholders out there. But the M5 South deposit is actually a pretty good one. So it's come up with 2.4 million tonnes at 3.8 grams per tonne. So that is for 289,000 ounces. So the underground scoping study that they had a few key details: 35,000 ounces for 5 years, $20 million pre-production capex, and an all-in sustaining cost in US dollars of 1,100. So what they're looking to do is displace tonnes that would come from the open pit, which are lower grade, with these higher grade underground ounces. So the outcome...
I can't believe 3.8 is considered high grade these days. How the gold world has changed over the years.
Times have changed, mate. They sure have. So like I said, you're replacing the open pit with the underground ounces. That would hopefully, for West African, mean that they can maintain producing over 200,000 ounces per annum from the Sanbrado complex. And it would mean, if you're looking at Sanbrado in its entirety, it'd be producing 25,000 ounces per annum more. Richard Hyde, the exec chair at West African, reiterated that the guidance is for 200,000 ounces for this year and for next year. And then when Kiaka comes online from 25 up until 2032, it'll be for 400,000 ounces. So if you look at the market, the market couldn't care less. The stock price is down today. It hasn't, it's been trading well below $1 for a long time now. They're trading at about 2 times 2023 EBITDA, less than 2.5 times 2024 EBITDA. It's nothing new. We've spoken about this for a while now, but obviously you've got jurisdiction risk there. This is in Burkina Faso. You've got development risk because they're trying to get Kiaka online. But even by the standards that West African gold mining companies get valued, this is, historically speaking, at the lower end.
Yeah. Do you think they'll ever trade at like a 4 times EBITDA multiple? Or is there anything that is the extra operation going to give them any sort of re-rate or?
I can see them getting a better multiple in a different environment. Those things don't change overnight. Yeah. Maybe they need to have a bit of diversification across, they're very Burkina focused, like a Perseus model where you have your exposure weighted across different countries within, Africa and West Africa specifically. But, those, like I said, those things don't change overnight. It might be a while coming yet.
Yeah. Right. From yesterday as well, Spartan, SPR. I think there's some dings.
Dings. Disclosure, we own the stock. So discount everything we say.
So they got some drill results out. So a couple above the newly interpreted flexure zone. So 18.4 metres at 6.1 grams, 21 at 4.14. So you can see it on here. So they look like they're, it's sort of widening out and flattening off there. But I guess the thing that stood out was you've got the Never, you got 4 pillars, you got west winds. But if you go back to the October, they released that announcement saying reporting 10 metres at 19.8 grams for their patient wolf gold target. So that was I think it was 1.6 Ks away from Never. So I was looking like it was going to be this potential other load. But then if you go to the back of this announcement, looks like the drill holes, the further up drill holes that they've put into the patient wolf gold target, either come back with no mineralisation or NSR, which is no significant result. So it looks like that load that they were looking for hasn't really been proved up yet as anything that's going to be substantial. So,
and that wasn't just another hole. That was quite a few holes in and around that they'd poked in there and nothing really came up.
Yeah. So, right, next, I think that's it,
That's it, mate.
That's
bloody
it.
rips through. Oh, geez.
Well done, mate.
We've got the bloody fundy carousel going on. We're bloody doing in-between jobbies. So,
Yeah, I
wicked
think that'll
video
be
tomorrow.
a lot of multitasking going on. Oh, should we get? Oh, we can't confirm Friday's one yet.
We
but
can. Yeah.
Has it been confirmed?
Yeah, time's locked in. Yeah.
Yeah,
But we'll build suspense.
We'll
We'll tease it
suspense.
tomorrow.
We've got a couple of
Good episodes coming up.
good friends of the industry coming on that we're pretty fond of in the media space.
Yeah, we've got two awesome episodes to release tomorrow and Friday.
Very excited.
Can't wait. Righto, Money Miners. Thanks to all the partners as always.
Investor Hub,
Oh,
DSI Underground, Terra Capital, McMahon Mining Title Services, Future Proof, Anytime Exploration Services, KCA Site Services, Brooks Airways, and Cadrill. Thanks, guys.
Hooroo.
go the Water Viper.
Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.